is August about to ignite a crypto breakout, or is last week's dump just the start of a deeper crash, the beginning of the end? In this video, I want to dive into historical price trends, geopolitical tensions, and macro factors that could either pump the markets or crush this bull market. Stick around as we unpack all the data here for you, okay? So look, let's analyze the signals. Let's try to uncover what's really in store for crypto this month. And of course, nobody has a crystal ball, but there are some things we can look at that might give us a hint about where things could be going. Now, before we dive in, it's also worth remembering August is also a seasonal dead zone for markets more broadly. It's the tail end of summer break in the US. All the big money people are just hanging out on the Amalfi Coast on their yachts. They're not buying dog coins right now, man. So a lot of traders, retail and institutional, they're simply just off the desk. And that means thinner volumes overall, which means things are less likely to pump dramatically. Sometimes exaggerated moves in both directions can happen due to that lower liquidity, but just so you understand the general idea behind why August is generally a rough month for markets. And in Asia, the latter part of the August month marks the start of the ghost month, a period traditionally viewed with caution by investors, especially in places like China, Taiwan, and Hong Kong, where a lot of money, of course, flows into markets. Now, whether you believe in superstitions or not, the market often acts a little bit spooky around this time, with sentiment already pretty fragile in markets, people dealing with extreme amounts of PTSD, and even fewer hands on the wheel right now. It can feel like a bit of a funny time in the market. Even small catalysts can trigger oversized reactions, things that in March, the market may not react to in the same way. So it helps to zoom out and try to guess, well, what could happen next. And of course, guys, Q4 only around the corner, which tends to be pretty good for markets, okay, just FYI. But anyway, well, we can't predict the future. The next best thing is to look at the past and see how people have reacted previously and see if we can, okay, history is not going to repeat, but maybe at least we can rhyme a little bit. And if Bitcoin really is starting to trade like a tech stock, then it makes sense to look at how traditional markets behave at this time of the year. Now, according to Jeff Hirsch, editor of the Stock Traders Almanac, August is historically one of the worst months for equities, especially in post-election years like 2025 is. Now, Jeff isn't just pulling numbers out of his butt here. He's carrying on the legacy of his father, Yale Hirsch, who founded the Almanac in 1967 and uncovered patterns like the Santa Claus Rally and January Barometer. These weren't just fancy names. They were data-backed trends built on decades of market history. And August tends to be one of the ugliest months in the book, okay? In post-election years, the Dow and the Russell tend to suffer most, with the S&P 500, the NASDAQ, and the Russell 2000, so Russell 1000 suffers, Russell 2000 not far behind though, all ranking August as either the 11th or the 12th worst month of the year. But that's just the stock market. What about our magic money? Okay, our magic internet coins. What are those going to do? Unfortunately, August hasn't exactly been a green month for BTC often either, at least when you zoom out across multiple cycles. Now, according to CoinGlass data, Bitcoin's average return in August over the last decade is a modest 1.57%, while the median return is negative at 7.49%. That's a pretty brutal stat for what many assume is a quiet month. But quiet and lack of liquidity for Bitcoin tends to mean prices go down. And it's not just noise. We've seen this mid Q3 weakness show up relatively consistently in 2022 and in 2023. Bitcoin posted double-digit losses in August, catching many bulls off guard. July gave us some decent gains, but the new month gave us an 8% dip from the 123K all-time high. It's not a crash yet. We're not in the bear market. It's just August, guys. It's not really inspiring a lot of confidence in the markets here, these kind of moves, but it is what it is. Lower liquidity environment. With macro uncertainty and low summer liquidity in play, caution can be justified. Doesn't mean you have to sell and walk away, but caution. Okay, sure. Just understand what's going on in the markets. Here's a twist. It's an interesting one. Because August in post-halving years has been a different story. In fact, it's been Bitcoin's best month during each of the last 3 Bitcoin halving cycles. Back in 2013, Bitcoin rallied over 30% in August. In 2017, it soared a staggering 65%, and even in 2021, during a choppy and uncertain recovery, Bitcoin still managed to post a 13.8% gain in the month of August. Now, maybe this is different because we're following the stock market more. This cycle's been weird anyway, so maybe we get caught off guard. It doesn't play out like this. It's a small data set with only 3 data sets to look at. Luckily, though, we are in a post-halving year, and August is still early. As for Ethereum, August isn't a typically strong month either, except during those post-election years. In those rare windows, ETH has, on average, put in an impressive 63.8% gain in August. What? It's crazy. Even a more modest move, say a 30% pump, would be enough to push Ethereum within striking distance of its all-time highs. Okay, so that's pretty interesting, isn't it? Equities tend to perform rough in post-election years where crypto has performed well. And again, we only have 3 cycles to look at, but still. So if the pattern continues unless Trump jinxes it or we're just too slavishly following along the stock markets now, then Bitcoin and Ethereum are set to give huge face-melting gains this month. Fascinating. Now, look, before we break down this story a little more here for you guys, if you're trading the markets, look, who's going to give you back $1,299 cash back just for depositing crypto? That's Femex, okay? Put in $1,000, you're going to get $200 back. Put in $10,000 and $999 back. $15K, get $1,299 cash money back in your account. No BS. And if that wasn't wild enough, they'll instantly upgrade you to VIP level 2, which means 50% off your spot trading fees, 40% off your futures trading fees. This isn't some tiny bonus. This is a huge bonus. This is a serious opportunity for active traders too to reduce your fees, stack rewards. It's big. Femex is an OG exchange, proven they've been around for years. They have deep liquidity and it works anywhere in the world. That's you. You might need a VPN in some cases, but in theory, everybody should be able to use Femex, okay? Now, this promo won't last forever. Hit the link down below. Claim your cash. Claim your fee discounts. Go check it out. Thank you very much. Now, outside of the seasonality picture, the macro picture is just as important. And right now, it's messy, let's say. We all saw Jerome Powell brush off Trump's call for rate cuts, although the job market weakening could push him to have to cut rates in September, but that's in September, it's not in August. The Fed's still holding steady at 4.25 to 4.5% rates, which might help cool inflation and keep the dollar strong, but it's not great for risk assets. High rates make borrowing expensive, they kill appetite for risk, and I know we've had all this market rally with those kind of rates, but still, what happens when the rates get cut? We go even crazier. All this, of course, makes buying bonds look like a more attractive deal versus taking risks in the market right now. That said, recent week job data could shift the odds for a rate cut. Traders are now pricing in a higher chance of a rate cut by September. If that probability keeps rising, don't be surprised if we see some kind of preemptive pumps here as investors try to front run the Fed before any rate cut announcements, okay? And speaking of rate cuts, one reason the Fed currently is holding off on rate cuts is sticky inflation, compounded by uncertainties around how Trump's tariffs will impact the cost of goods and services. Now, so far, inflation's low. It's under 3%. It's 2.5, 2.6%, something like that. It's fine. It's not their 2% target, but it's close enough. But the tariffs could spike it, and that's what's held Jerome Powell back from cutting rates. The CPI for July will be released on August 12th, with PCE following on the 29th. While exact figures remain unknown, the Cleveland Fed nowcast estimates headline PCE at 2.59%, down from June's 2.6%, and headline CPI at 2.72%, slightly up from June's 2.7%. So essentially, they remain unchanged, although slightly changed. So unless we get a clearer number, this one could be a bit of a coin toss, although we most probably see inflation go up because of tariffs that are starting to take effect on August 7th. Now, it doesn't take a genius to see that slapping major trading partners like Canada with a 35% tariff will probably affect the prices of goods that you pay for, okay? That brings us back to our original question. Will history repeat and bring us good fortune? Good fortune to all Bitcoin holders in the month of August, or will macro headwinds and sticky inflation and Fed and World War III threats and all that kind of BS crash the party? The truth is, no one really knows. I don't know. You don't know. No one's got enough of a crystal ball. But let's take a quick trip back to August 2021, also a post-halving month like today. Back then, inflation was much higher, with CPI hitting 5.3%. Unemployment was worse at 5.2%. However, the Fed's benchmark interest rate was near zero, which made money cheap. This easy money, the environment that it created, helped fuel massive rallies in crypto and risk assets alike. Yeah, we then had a giant hangover in 2022, but we had a great 2021. Bitcoin gained about 13% that month. That low rate is the big difference, the key differentiating factor between where we are and where we were. August 2025 has a few things going for it that 2021 didn't. For one, the global M2 money supply is still climbing, meaning there's more liquidity coming to the system. There's more fuel in the tank than you might think, with rate cuts probably coming in September. So markets are starting to get excited about that. Then we've got clearer crypto rules, the White House that's super pro crypto. And lastly, institutions, they're not just watching anymore. They're actually out here. They're stacking Bitcoin, they're stacking Ethereum, whether that be through ETFs or treasury buys. There's incredible demand right now for cryptocurrency assets, adding some serious weight behind the market currently. I can't say if it'll be enough to nudge the market much higher in the month of August, but really, having been through a couple of these post-halving years already, this August has the strongest tailwinds I've ever seen. Doesn't mean the price moves dramatically in August, but when you see what's pushing up, maybe September's the month when we get the rate cuts. That's when markets will pump. Q4, going to be crazy. Let's see. But don't get shaken out by seasonal August volatility, okay? Keep your eyes focused on the big picture, and if we pump, fantastic. If we don't, better days are not far away, okay? Thanks for watching.